Hi everyone, it's Stuart here. 2 day break, excuse me. Hope you are all well. It's Thursday, it's the 25th. The year end is looming. As I said on Monday, many portfolios, including mine, will be closing the September book tomorrow. Obviously, we still got a few days. I think it's Monday and Tuesday, isn't it, next week, 29th and 30th, before the official end of the month and the quarter, the key third quarter coming to an end next week as well. So, anyway, I've been away from the screens for 2 days, and so let's have a quick recap of what's happened. Basically, stocks have continued to decline. The dollars continue to show a bit of strength. It was had a particularly good day yesterday. The PMI data on Tuesday was particularly weak across the board. There was a note within the euro area where the services was actually a tad better than expected, but everywhere else it was quite weak. Quite a surprise rise in services in Germany as well, lifting the euro number better than expected. So, but it's still very very weak at 51.2, 51.4. And you see here, manufacturing in France missed expectations, slipped back into the negative area. UK was the same, missing expectations. Look at that manufacturing number, 46.2. Remember, these are forward-looking. These are the preliminary. You can see there, it's a preliminary reading for September. Not good stuff here. And across the pond in the United States, we had similar numbers, negative numbers, raising this idea of potential recession is still getting kicked around. We've got this strengthening of the dollar that we've seen since the comments, particularly at the press conference from Powell. So we've seen a sort of a steady rise last week. We had a 3-day rise Wednesday, Thursday, Friday for the dollar last week. We've stuttered a bit this week, but we were up very, very strongly yesterday, and we're sort of sideways ahead of this big data dump that's coming this afternoon in a moment. So yes, stocks down yesterday. They were down 18 points, 19 points. S&P 500 still in record high territory. Dow was the same earlier. Nasdaq is suffering more significantly today. So Wednesday, big surprise was this big boost for new home sales. Look at this, 800,000. Remember, traditionally I've always talked about the 550,000 being a key sort of growth expansion for new house. So what's causing that? Why new homes? Well, homes have been and building permits stronger than expected as well. Perhaps anticipation of the rate cycle, interest rate cuts coming. But remember, with the US, mortgages are on a fixed 30-year rate. Fixed term and fixed rate over the 30-year typically. So the short end interest rates coming down obviously has a knock-on impact, but that was a bit of a surprise. So some signs of life in the housing market in the United States after suffering some very big declines. iPhone numbers out of Germany yesterday was also weaker than expected, back under the 90 handle yesterday. This morning, the main news this morning was that no change from the Swiss National Bank. The head of the Swiss National Bank, Schengel, was, still said, we're happy to intervene. Very, very interventionist central bank. Remember, there was some chatter running up to this meeting about them going back into negative interest rates, which still makes me smile and makes me scratch my head, to be honest. Negative interest rate policy, but anyway, some people seem to think it worked. But yeah, willing to intervene again. He commented the Swiss franc took a bit of a hit this morning on that, but there was not many people within the board looking to take that negative again. So we remained unchanged. And I say the Swiss franc got hit as following that and his Schegel's press conference earlier on today. Obviously, outside of Wall Street and the markets, we've had Trump's free reign at the UN, the teleprompter breaking down, the elevator breaking down. Apparently, it was his videographer who was going backwards up the up escalator. So in fact, he went off it backwards, the up escalator, triggered it to stop. But anyway, complete off the cuff remarks from the president. Well, with all due respect to him and the Americans, a lot of nonsense talked about, particularly about Europe, particularly about London. It hasn't gone down very well here in London. Where do we go? What are we going to see with these job claims numbers coming up? Remember, the labour market has taken focus now away from inflation. This idea that it's a one-step rise in inflation. We're still waiting, still data dependent, according to Powell. And again, he said that earlier this week. He did have a speech in the earlier this week, as have many. And interesting, as I'm speaking now, Stephen Myron, Trump's man on the Fed, he's been interviewed on Bloomberg Telly at the moment, and obviously talking about two big 50 basis point hikes coming. He's released some interesting models, actually, to be fair to him, about the terminal rate being much lower than his colleagues have predicted at the moment. But at the moment, we're still looking at two cuts from the Fed for the rest of the year. Next, certainly nailed on for October, and looks like December. There's only 2 meetings to come anyway, so October and December look like they're going. We'll have a look at the data in a minute. We'll have a look at them in a minute. At the moment, there's a 92% chance for October, and for the rate to be down to 3.5 to 3.75, 75% chance of that by December. So, big move from where we are at the moment. Certainly where we were this time last Tuesday, before ahead of the Fed's announcement. But anyway, see what these continuing claims are like, what the weekly claims are like. 1.9 million. Remember, people are itching about this 2 million. It was better than last week. This 233. Remember, we got to 265 on the initial claims. The migration plan, or the lack of immigration, the squeeze on the sort of migrants, the illegal migrants, as the U.S. administration would call them, is obviously squeezing new entrants into the market, into the jobs market. But clearly, there's a bit of weakness in demand as well. So we got weaker supply, weak demand, hence the jobs numbers. This big recalibration we saw in the non-farm payrolls numbers, but the weekly claims, the weekly initial claims, hasn't been rising. But that, again, you see, if there's not new people coming into the market, that would explain this 230, 220 number coming back, rather than that and the spike to 245, 265 being a wee bit outlying numbers. GDP is backward looking, and it's also the final reading today, so that might have less impact. Obviously, the core durable goods numbers are also due in about 5 minutes time at the bottom of the hour. Let's have a quick look at the markets. This is just my 5 minute. We've been doing this short-term trading with this, so we've been short, long here on 5 minute here on the DAX quite nicely this morning. So I've been away from the markets for a while, so I've been playing around with those. Crypto has fallen. Bitcoin 111,000. There we are. Sorry, to take this with the hourly time frame. So let's take the daily time frame. So the breach under 112,000, that move down we saw on Monday, has been sort of consolidated over the last couple of days, and we're back at the lows of that move lower so far today, 111,400. So you can see the little trend line was your break to the upside, which is going to move higher on an end of day basis. But the big move, as we said on Monday, was the breach of the midpoint of the Bollinger Band there, the 20 period moving average, daily moving average. Big down day on Monday. I say we've consolidated that move lower so far this week. Next downside, the bottom of the Bollinger Band sits there at 109,900, so 110,000 is the next level to the downside, and this low from the end of August took us to 107,000, didn't we? Looked like we were moving up. Looked like we were moving up quite nicely, up to 117,000, but we've come down quite quickly as well. Despite, or as well as, sorry, let me get my huge head a bit smaller. There we are. Despite the weakness that we've seen in the dollar, the comeback in the dollar. So 27. Let's have a quick run through where we are. Let's just look at the dollar crosses So the Swissy, I said this morning, come under pressure. So dollar's up against the Swiss franc here into its 20-day moving average. Yen, dollar again had a really good day yesterday. My strategy was I haven't taken any trades this week, but my strategy triggered along last night on that one. Dollar up against the yen, 148,800. So sorry, 148.80. So 149 next big line in the sand. But a strong day yesterday, and it's hanging on to its gain. So that's the key thing. CAD looking at 139, similarly sort of move here. There's that's Wednesday last week. Remember, we had that three, as we said, we had a strong rally last week. Monday, we went over the 20-day moving average on many of the dollar crosses and fed through Tuesday. And again, as I say, strong dollar day yesterday. So dollar up. We're into a key resistance area now at 139. Do we move higher? Possibly. If we break that, 139.70 is the next upside target for dollar CAD on our end of day basis. Euro, from these rallies to 120 or what looked like 120 not that long ago. Here we are. This was the 17th during the Fed announcement last Wednesday. 119.20 we got to, didn't we? Down for the close of Wednesday, Thursday, Friday. Bounced a wee bit on Friday. On Monday. Looked like we were moving high, but then we're back down. So big test now for the Euro traders. You Euro traders on an end day basis, guys. Big support here at 117.40, where the 20-day moving average is. And you see we're still over the 20-day moving average today, and very little movement ahead of the data that's just about to pop in a moment. So let me just get that up in a minute. There we are. Gold. Somebody was asking about gold this where I was away, and it continues to be bid on an end of day basis. This is the daily time for gold. You can see that big breach of the 3,700 handle here on our derivative market on Monday, and we've again another one that's consolidated at highs despite the strengthening of the dollar. So down day yesterday following the strong day for the dollar. But we're back up again this morning, and we're still significantly over that 3,700 handle. All-time highs on Tuesday, 3,790 zone was pushed into. 20-day moving average there at 3,635, and the 50-day sits actually right at the bottom. I haven't got that on here now, but the 50-day moving average sits around about that 3,460 area, where the bottom of the Bollinger Band happens to be as well. So don't get too spooked from the down day yesterday. Gold bulls, it's still very strong. You'd like to see a significant breach of 3,700, like the significant breach to the upside was to the downside, if this is going to roll over and move down to test the 20-day moving average. You see there what a support level that is, 3,630, 3,640 zone for gold on that higher time frame. So let's have a quick update on the calendar, as the data is about to drop, and unfortunately it's got all the filters in, so let me just let's put the main ones in and apply. I should get rid of some. So Thursday, here we go. So it's all green, so initially it's positive. So the key one is that initial jobs claims 118,000. So it looks like companies are still hanging on to people. They're not letting go, but they're not hiring either. 118,000 initial jobs, and that's positive. The continuing claims also moved lower, not by a great deal, but 1.9 million, 26,000 from 28,000 last week. That was moved higher, so that's been revised higher, but it didn't get to the 1.9 30,000 as expected. Core goods orders quite positive, a tick up in the inflation. You see core PCE prices, we'll see more about that tomorrow. The price index was higher than expected, but significantly lower than last time. Core durable goods, 2.9%, and all better than expected. Interesting. The revision. It's not much of a revision. It was still negative. So it's a positive durable goods order as well. GDP has also been revised high, quite significant. That's a significant revision. This will lift stock markets are under pressure, and put pressure on the dollar. This dollar rally that the cuts might be escalating, might be coming early, and it depends on how the market is taking Mirren's comments this morning about 50 basis points being necessary, multiple 50 basis points. Goolsbee, interestingly, yesterday talked about no more cuts being necessary, no more than 2 cuts being necessary this year, and even questioning the second cut after this. The assumption was he's going with the October cut, but not the December cut. But again, things can change, data can change as we go into the year end. So strong GDP, claims the jobs market still looking incredibly robust, 218,000, but it's the participation rate really. That's what everybody will be focusing on next week. So it's the week after next in the non-farm payroll numbers. Drill down into that as well. Still, we've got some more homes data later on as well this afternoon. Plenty of chat. We got Mr. Williams from New York Fed, Barr, the head of supervision, and Chief Hawk, Miss Daly. Sorry, Chief Dove, Miss Daly, later on today as well. So lots and lots of chatter from the central bank. I say Mirren has been on CNBC this morning. He's been with Bloomberg as I've been speaking. I think the interview's probably over, but yeah. So strong data. So let's have a look how the market has reacted to that data. 10-year yield has come down. It's at 4.173. Gold. Let's just flip to the. That's a daily time. Let's see how gold's reacted down that 5-minute time frame. Weaker gold is the initial reaction, down to 3,745. It's been a difficult one to react. So that would have been long here on that cross there. So that would have got there. That would have been your first target there, and we're looking at. But if if you've been long, your stop losses here, you've been stopped out with that move up, a flat trade. But gold are moving lower on the news. Let's see what this strategy. The God bless Trade Locker. It's got rid of all my layouts, and the only one I've been left with is the Bollinger Band and the Stochastic. This is a mean reverting type strategy. So the trade with this strategy, it's a standard Bollinger Band setup. So 20 and 2. So it's 2 standard deviations. The moving average is set at 20, and it's 20 candle countback. So that comes out of the box, out of the platform like that. That's a standard setup. The stochastics, on the other hand, though, I've tweaked them quite a bit with deference and thanks to Trevor Neal, who first showed me this setup. So the stochastics are set at 10. Let me show you the settings. 10, 6, and 10, 6, and 3. Still the overbought set at 80% and the oversold set at 20%. The inputs here, you can see, just ignore the RSI there on that. So it's 10 for the length of the stochastic. The K is 6 and the D is 3. So 6 for K, 3 for the D line, and we're looking for a cross of those two, the pink and the orange line here. And then we're also looking for a touch of the outside of the Bollinger Band where this strategy works. You look, the Bollinger Band is a driver, and then the stochastic confirms it, but you need both of them. So here, for instance, here we've crossed in the oversold area. You see there, the stochastic is that candle there, isn't it? But we'd already touched the outside of the Bollinger Band. So you were looking to go long here. That was your first heads up there at 12 o'clock, but it was 1, 2, 3 candles, 4 candles later. In fact, 5 candles later before you actually got a long position. Okay, so you would have gone long there. Let me zoom this up a bit to show you what I'm talking about. Those of you that are interested in trading this, if you're not, fair enough. It's no skin off my nose, as I say. So it would have gone there. You can see a bit better there. You see the cross happened between the candles. That's often the case with stochastic. So you'd have got long there. Where's my paintbrush gone? Highlight. So we'd have gone long there. So the first trigger was that point there, but nothing happens there because we haven't had a cross the stochastic. We've gone. In fact, you couldn't take that shot, but that's not really what we're looking for. We're looking for a turn up here because it's already down. We'll come back to that. So that's our entry. First target could be the upper Bollinger Band. So that's sort of been target one. And then target two would either be the outer Bollinger Band or when the stochastics then next cross. So that's what's happened there. We've had a cross, but it's obviously running into the main data of the day. So whether you'd be trading this on a 5-minute time frame into the main data, be careful, basically, because that was still long. It crossed there, so that would have taken me out anyway. And now it's touched there. And now look, this strategy, because it's a mean reverting strategy, is looking to go long now because it's touched the outside of the Bollinger Band. But obviously the trend is very much down. So if you're just using if you're running with the stochastic, you could have closed your long position, which second long position there, because it hasn't got to the target two, and then just stayed out ahead of the data, or waited for the confirmation of the cross, which would have come here after the 5 minutes of the data's passed, and entered there, short there, and it's running down. But again, I say this is a mean reverting strategy, and it's looking to move higher. That's default 5 minutes setting for my stochastics and Bollinger Band strategy, with due deference to Mr. Trevor Neal. Thank you very much, Trevor. I don't suppose you'll ever see this, but forever in your debt, my friend. So let's have a look at the 4, where we've gone with the Forex. I've got Euro 117 down. So dollars bid on that stronger than expected data dump. There's another headline here. Q2 person spending has gone up to 2.5% from 1.6%. So things are looking quite good. But however, interestingly, stocks continue to decline. So the dollars back on the front foot. Euro down here quite significantly. And again, if you trade in that one, if we look back, that would have been, so there you can see it's crossed there. Sorry, it's touched the outside of the Bollinger Band there. Stochastics crossed there. So so that would have been there before it actually got in. So that's the cross. You can see, bloody platform. It got to target one and it's bounced. So it's there we go. So it's crossed there. So you'd have got out there. Is this going to work? Oh, no, it's not. Oh, it has worked. Yeah. So we got out. So we've gone long, got out there, and then it's crossed there as well. So it hasn't actually touched. See that? Oh, there it did. Yeah, it's just touched the outside of the Bollinger. Oh no, it didn't actually. It hasn't actually touched there. It looks like, depending on, it's a very slight touch, so you're probably not good enough to go. But that's gone. So it has touched the outside there. It's gone long there at 12.20, and that hasn't worked out because it's reversed on you. Stop loss would have been down there. Because that's trying to go long. Now it's crossed short, obviously post data. There you can see that. And that's plummeted down. So it's trending down. So mean reverting strategies aren't going to work until we see a turn. So this is looking, we're waiting for this to cross back to see where we get the floor. And obviously 117 is where we've got to, 117, 1.7. So within a smidge of 117. So dollars a bid. And stocks, let's have a look at stocks. Choose the NASDAQ, again, continuing to move down. So this has been trending lower all morning. Let's have a look at this one. Yeah, sorry, the daily. There's the rally we had on Monday, up, and then we've been down Tuesday. Tweezer top, classic little tweezer top setup there. Perfect size candles, negatively to positively. So there's your top, there's your stop loss, and down it's been Tuesday, Wednesday, and we're down again today. Line in the sand for NASDAQ traders is 24,000, where the 20-day moving average sits. If we come down to the hourly chart, we've been trending lower, say, all week. From Tuesday afternoon, there we are. We've plateaued Tuesday. Down we go, down. The 20, again, Bollinger Band playing very much. Down we go. And now you can see there that the hourly chart ran positively from here. So we do Alt F. Yeah, so from there to there, you can see that Alt F. So that's our first target. Stop loss would have been here, and we stopped, so it hasn't gone breached that. So that, but that's now crossed. So we're looking to go short because we've been held in the under half of the Bollinger Band. So that's short, and it's been short all the way down there. We might be getting out at the moment, but we'll see. On the hourly time frame, that is on the Nasdaq. On the shorter time frames, in response to the data, there was an interesting gap, wasn't there? Look at that, gapped down to the downside. So that may get filled later, may not. We're continuing to move down, and it's in the under half of the Bollinger Band, so you want to be looking to go short. That was a failed cross there. It's up, went up, and then you got stopped out on that one. And it's run up, topped at the 20 period. So there's your opportunity to get short again at 24,375. Very tentative, given that the long had ran out of steam before the 20. So again, it's adding to the emphasis, isn't it? Remember, this is supposed to be, when we touch the outside of the Bollinger Band, we had as we've been coming down all morning. This is just a simple reverse of the main downtrend this morning. You can see that. So it's a really good point. But again, if you follow the rules, the cross happened a bit after that. And actually, the cross didn't, you wouldn't have got filled until there. So you've gone short there at 24,351. If this is automated, the cross didn't, you see the cross has not taken place. If we've gone down the time frames, this lower time, so the 3 minutes that we still got the gap. The 2 minute, remember, if you've got a pro account, you can trade within the 4 minute window. If you've got a standard account, no new trades 2 minutes before the main event and 2 minutes after the main event. So there's the 1330 candle. So Alt V. So there's our 1328 candle there, Alt V, and there's our 1332 candle, Alt V. So you shouldn't be taking new position. I mean, if you'd been short this all morning, all well and good. It's not a problem at all. But you can see the impact of the data. So you could have entered there at the end of 32. So you'd have been short there, and that's exactly what that strategy is saying. Go short there. So you'd have gone short. Interestingly, no, you wouldn't. Sorry, let me correct myself. That would have been long from here because you've touched here. So that's gone long. That would have still been long. So you'd have been long from there. Sorry, let me just correct myself. Getting carried away myself. So that would have been long from there. Here at 2371. That's, why isn't that line not placed? Didn't want to play. So it's gone long here, actually, ahead of the date. You see that cross, and it's got to target 1, which is the midpoint of the Bollinger Band. Didn't quite get to target 2. Didn't get to the Bollinger Band outside. Looked like it was going to there. It's where was this? This is 1324. So it's right, 6 minutes before the data, when he had still got it open then. But then at 26, huge reversal, big engulfing candle, even on these 2 minute time frames, engulfing the last 6 minutes, 8 minutes, 10 minutes, 20 minutes. There we go. See, it's that big engulfing candle there at 1326. That would have been enough to close out my long position. And also we've crossed here, so go short here. We've gone back. 2 things happened with the MACD. The K and the D line have crossed there on my stochastic setup. We're still in an overbought area, but we've rolled over, moving down, and we've gone back under the 20 period moving average. So short there ahead of the data, and we're very much in the money now, aren't we? However, we've crossed there, so I'm out. I would have been, if I'd traded through the news, I'd have got short here. Let me just make a. So we'd have got short there, and we'd have come out now on the cross there. Right, it looks like we've caught the bottom of it, but that's what this 5 minute strategy would have done, because we've gone on that. Oh. That one there. There we are, Control J. So that would have been your 2-minute trade on the Nasdaq during for the data. Obviously, could have gone the other way, but it didn't. It was moving. It's moved down, so we're out of that one, and now we're looking to go long. As you can see, we touched the outside of the Bollinger Bands. Loads of candles before 1, 2, 3, 4, 5, and it's trying to move up. So the short was closed, and it would have triggered a long as well on that point. But it looks like it might be crossing down, so that would have been short-lived. With our stop loss down here somewhere. So the trend continues to now. So the trend is overtaking the move down. So anyway, I'm showing you trend, but you get the drift. Stocks are lower today. Let's get rid of all those lines because I didn't like the lines on my chart anymore. So a strong data dump from the US, interestingly, pressuring the sell-off that we've seen over the last few days in the stock market. So the trend is moving lower here. You see on the hourly chart from this high here that we saw on on Tuesday. So Wednesday and Thursday down again. You see on the hourly chart time frame there. So a move to the lower movement down. So Nasdaq is down. S&P 6,600. Very similar looking chart as you might expect to see. S&P 500 again. Hourly cross there, projecting the 20-hour big move. That was this morning, wasn't it? Asian time. So I've seen that then. So moving lower. So dollar bid, stocks lower, dollar up, and a gold lower. We'll come back to Bitcoin in a minute. So gold 3,737. Oh. Downside. So remains obviously on the higher time frames. Remains too early to tell. Remains bid, but that's a significant hourly candle forming there. Say the reaction as we saw earlier was a -1. So that's the cross up there. What we got in here, and that's what we were saying before, wasn't it? That's our short position from the the conclusion of the data there at 13:30 as the data has come out. It's gone short, but so again, let's look at that on the 2-minute. How would we have traded that on the 2-minute chart? So that is the 30. So that's 32. And again, it's sort of crossed up there, hasn't it? So again, that one would have been short. Having touched out there, it would have gone short there on that. See the cross of the blue going from above to below. The K and the D line crossing there, the blue going from above to below the orange line, and down we go. So again, that would have caught. You would have caught the downtrend on that one. There, that's across there. Tentative entry, to be honest, because we're still above the 20 period moving average, and it looked like it was going against us, but it was obviously the data itself that came a few minutes later. Again, standard account, you shouldn't have entered there, but you could have entered on the bounce here. Still negative. We were looking to go long, and that's there we go. We lost all the so that's gone long there, and then it's crossed. Oh, that was that other blob, wasn't it? So we'd have got out there. So we'd have got that little move there on that one. So from bottom of there, wasn't it, to there would have been your trade there. So you can see it's crossed. It's moving up, but it's dipped again. So the trend, it's not mean reverting. Basically, the trend is continuous, stuck on the outside of the Bollinger Band, and we're moving lower here on gold, 3,732. It's where we are at the moment. 3,729 is the bottom of the Bollinger Band. So the Bollinger Band's opened up and moved down, but it doesn't matter. We've got that sort of move, just following the simple rules of this very simple crossing stochastic and Bollinger Band strategy. It's just applying it, my friends, as ever. So if there's any questions about anything, it doesn't look like it, I will wrap up for today. So just a quick recap of today's strong data out of the US. GDP much better than expected. Durable goods much better than expected. And initial job claims much better than expected. 218,000 initial jobs claims in, so we're back under 220,000. Tight jobs market continues. The continuing claims is reversed. It's rallied. It's eyeing towards that 2 million level. It's come back down. Durable goods stronger than expected. And GDP 3.8%, the final revision of Q2 GDP. From an expected better than the 3.3% last expected, and obviously the big revision upwards from last time. And inflation also significantly weaker than last time on the price index at 2.1% from 3.8% last time. Trades balance was also not too bad actually, a negative 85 from 103 last time. So. Okay, there we go. Strong US data. The administration will be happy with that. Mr. Mirren, Trump's man on the board, will be happy with that as well. So, however, stock markets have not rallied. The dollar has, and so it looks like that. Watch, if we just come to the Fed Watch tool. Let's say this is. I'm going to review this. I'll update this. I deliberately opened it earlier. This is the December meeting where we've got a 73.5% chance of a rate being as low as between the 3.5 and 3.75. So much lower than where we are. That's a whole point below where we are. 50 basis point below where we are at the moment, and only a 1.6% chance of it staying there. So that's the December meeting. That data would have changed the October meeting. I wouldn't have thought. In fact, it has. It's cooled the chances. This was 92% ahead of the data. It's now 84% of a 25 basis point cut, and 14% now of no change in October. I still think that's going to perhaps weaken. So there's the two sides of the argument: the worry about inflation, and the obviously they've got their two mandates, and the labour market. So the labour market's still showing its robustness from those initial claims, but clearly there's not the hiring going on, and there's not the supply coming from migration. So. Excuse me, drinking out of a can. It was in mine. So dollars lifted there from that 92% to 95% move down, and so the December number now. Let's have a look at the December number now. So that was 74 for another 25 basis point. That's come down by over 12%. So that's now only 63.2, and a third of the market bets now for just a 25 basis point cut from now in December. So cooling of expectations of more rate cuts to come, lifting the dollar as we saw, weakening gold, and also weakening the stock markets, particularly the NASDAQ, because obviously the tech companies are much more vulnerable to the higher interest rate. And interest rates not coming down. So again, a bit of a vindication for Jerome Powell as well from last week, and what he was saying earlier this week as well. So let me just leave you with crypto today. Bitcoin 111,100, continuing to we looked at it a minute ago, didn't we? We did look at it on a short term basis. Yeah, we looked at the daily trend line, wasn't it? We've already looked at crypto. We have indeed, haven't we? Okay, so there we go, my friends. Take care. Just say move positive for the euro on the dollar on that data. See what existing home sales look like. That'd be interesting, given that the strength of the new homes yesterday. and any obviously Fed speak colouring the market. Tomorrow is the key core PCE price index. It's the most important piece of inflation data that the Fed considers. In round compared to the CPI data. So key numbers. Same time tomorrow for that. I'll see you for that. In the meantime, take care, stay safe, and trade carefully, my friends. All the very best. See you soon. Bye bye.